Hi, everyone. Welcome to the second session in our pre-event sessions and learning. And the idea behind these sessions is to give you a few clues, tips, pointers on topics of interest for everyone in the community. So today's session is about accounting and about those things that we tend to get wrong, the pitfalls in our bookkeeping. So I want to hand you over to Julie, who's going to introduce herself very nicely and to her background, etc. And we have known each other for a few years. She's also been instrumental in the initial setup of the Wisbys. So we're really happy to have her as a speaker. And we're honored that she's helped us and worked with us to build what the Wisbys has become. So Julie, without further ado, I shall pin you.
Thank you very much, and thank you for having me. I'm very excited to be able to bring at least a little something to you to help people understand bookkeeping a little bit better, because I know how daunting it can be for people. So hopefully you can see my screen, which I am sharing. So I'm going to run through essentially the bookkeeping pitfalls and how you are best to avoid them. So before I go into that, just a little bit about me. So I am a small business consultant. So my background is in operations, HR, and small business finance. So for most of my working day, you found me offering an all-round operational hand to small businesses. I started my own self-employment journey back in 2020, and I opened a small business where I made and sold my own jewellery, Julie's Craft Cabin. And it was through there that I found a lot of people with these beautiful products that were really scared about scaling and growing their business because they didn't understand the finance. So I developed some bespoke training for them, which became Handmade accounts. And now I have a growing membership and a small community of small businesses and side hustlers who are growing their businesses along with their finance skills, which makes me incredibly happy. So I just want to talk about the importance of actually understanding the financial side of your business. So having a clear understanding of the financial side is key to understanding your business as a whole. We can't do that unless we've got accurate and up-to-date records. So the bookkeeping process is the process of compiling and maintaining those records. As well as it being one of our legal responsibilities as a business owner, the data that we can draw from the records, it's really useful. It can help inform financial decisions. It provides the necessary data if you want to create a budget or forecast your cash flow and set realistic financial goals for your business. So I'm going to run you through the biggest mistakes that I see when people are doing their own bookkeeping, just talk you through the steps that you need to take to try and avoid them or rectify them. Before I go on, it is okay to make mistakes. And it's easy to do if you're unclear or unsure of the topic. And a lot of people, when they're setting up a business, haven't had to deal with finance at all. So it's one of those things that it is easy to kind of get tripped up with. But mistakes are how we learn. And it's really important to know that it's not catastrophic. There is always things that we can do to rectify them. It's never the end of the world. And with anything, it's a lot bigger in your head. So in the early days of your business, when you can't afford to employ somebody to do it for you, a lot of people rely on Googling information, try and cobble things together. I mean, this in itself can cause a lot of problems. The sources that you're getting your information from might not be reliable or credible. So it's important to make sure that when you are doing your own research, just double check that those sources of information are correct. So the first thing that I see people kind of getting tripped up with, and this is very in the early stages of your business, is not researching the legislation. So the legislation and the guidelines that surround small business finance will be different depending on the location and the size of your business. So it's really important that we take a look at the laws which impact us and the guidance that impact us, and then take steps to make sure that we are applying them for our business. So for UK businesses, this will be things like making sure that you know if you need to register for self-assessment, what needs to be filed, when it needs to be filed, when payments need to be made, whether or not you have to register for VAT, how import or export duty will impact us depending on who it is that we're trading with. For limited companies, when you have to file your accounts, your corporation tax, what even is a confirmation statement, and when this needs to be reported. There are lots of different pieces of information out there, and we need to establish what affects us and our business. The good thing is there are a lot of financial professionals out there practicing accountants or bookkeepers that will offer free initial calls, paid consultations. Small business groups that are dedicated to finance will normally have somebody who is suitably qualified in charge of them. Taking up something like a paid consultation might be sufficient for you to be able to get the information that you need to know what legislation is going to impact you. And if you're finding that you are wading through lots of information and you're still not clear, make sure you reach out to somebody. It's very important that we remember we don't have to do any of this by ourselves. Another thing that I see people stumbling over that a lot of people don't realise the importance of is not knowing your actual start of trade date. So making sure that we have a really clear idea of when our trading start date means that we're not going to trip up on things like claiming free trade expenses. So this will vary geographically, but in the UK we can claim free trade expenses for the 7 years before we actually start trading. If you don't know when your start of trade date is, you could actually lose the ability to claim these expenses from before you were in a position to actually provide your products and services. So how do we determine this start of trade date? In the UK, there is no definitive definition of trade. We draw on general guidance and court rulings to build an idea of what that is. So for me, I look around 2 parameters to determine when people start trading. I look at, are you in a position to be able to provide products and services? And secondly, we then look, are you offering to do this in exchange for payment? So they're the 2 things that impact where we look at your start of trade date in the UK. And what it does mean is you could be trading before you've even made a sale, which is why it's really important that we make sure we have a clear idea of this date. In the UK, we have something called the trading allowance. It's an additional £1,000 that people can have in income from trade before they have to register for self-assessment. If in your first year you rely on that trading allowance, instead of kind of compiling accounts and collating all of those pre-trade expenses, you could miss out on being able to claim them. And let's be honest, it's really nice to be able to celebrate it. It's really nice to be able to put a post out to say, just had our first year, we've just had our second year, I can't believe that it's been 10 years already. And you can't do that unless you're really clear on that start. The third thing I'm going to talk about is people who don't start early enough. So what I mean is people will put off doing their bookkeeping. You don't want to face it. And instead you go, I'll just deal with it later. But when you deal with it later, you're actually facing a much bigger problem. You're faced with having to remember what a lot of those transactions relate to. You're working to a lot closer deadlines. There could be a problem that you actually need professional help to try and resolve, and trying to get to the bottom of that and trying to find somebody last minute can be difficult. I understand why you do it. Like, it's not fun for a lot of people. For putting your accounts together and keeping your bookkeeping records is not fun for a lot of people. And it can feel very challenging if you're not sure about the process. The implications of getting it wrong can feel like they're going to be huge. But these actually are all really good reasons why we should start to do it as early as possible, ideally before you've even started trading, to make sure that you are keeping a record of all of that pre-trading expenditure. You need to be making sure that you're keeping clear records just in case anybody needs to look at these in a professional capacity, whether it's you go to somebody because you're scared of filing your first tax return and you need to just hand over a load of paperwork, or whether it is that you filed everything and people need to look back on it. We need to make sure that those records are clear and accessible and understandable. It is an issue for a lot of people that they will put it off because they're scared of it. And I always find that with things like this, like I said, it's bigger in your head. And as long as you're taking those steps to do it, and I will run you through at the end the process that I use in order to do it, that we do just bite the bullet and get started. On a more kind of practical note, it's really easy to duplicate transactions in your account. So when you're actually going through the process of logging your income and logging your expenditure, duplicating transactions is surprisingly easy. I see this most often when people are using software that has multiple bank accounts linked to it. So imagine this. You have a PayPal account that's linked to your software. You purchase something through that PayPal account. So you're logging that as the expense. So say I've bought a new computer through PayPal, that outgoing transaction from PayPal, I log as my computer. You'll then have a transaction coming in from your business bank account, hopefully, into your PayPal account. When the money comes into your PayPal, you go, that's from my account, that's fine. When you see that money going out of your account, it's really easy to go, oh, that's that computer that I bought, and log it again as a computer. So the only way to really avoid this is to think about the flow of everything that you are putting into your accounts. Think about the transactions journey, think about where the money is moving to, and you will find that you'll be able to identify a lot more easily where that actual outgoing expense transaction should be. I also see it if people utilize credit agreements. So if you buy something on a buy now, pay later kind of agreement, when you first purchase it, they will send you the invoice and say this is due to be paid in 30 days. People will log that invoice in their accounts. And then when they pay it, they will log it again. So again, think very carefully about the flow of information. Is this an outgoing transaction, or is this payment of an invoice that you've already logged? So just have a little think as you're putting things through. Don't rush it. We take very clear steps and we just don't rush the process. And linked to this, inputting errors. So if you use professional software and have these direct bank connections, and what that does is it pulls the information directly from your bank account, and this will minimize a massive amount of the inputting errors because it's linked directly to your bank account. If you use a spreadsheet or you use paper to keep your income and expense records, it's really easy to do things like mix two numbers up. It's really easy to put a decimal point in the wrong place. If you're doing manual calculations when you're adding things up, it's really easy to get that wrong. So again, don't rush it. Double check everything that you're doing. Is it definitely the right amount? Is it definitely for the right thing? Is this the account that I paid it out of? Double check any calculations that you're doing manually. Just make sure all of those pieces of information do match. I say getting personal. And when I say getting personal, I mean we should be very familiar with our bookkeeping, but I mean there are a lot of people that are mixing up business and personal transactions. I will always promote using a separate dedicated business account. There are lots of free ones out on the market that you can use at no additional cost to your business. This means that you are separating your business and your personal transactions at the onset. It makes it much more difficult to accidentally interpret something like a personal purchase from a shop to a business purchase from the same shop. Obviously, I work with a lot of craft-based businesses, and the business and our hobbies, they interlink very closely. So if you're putting off doing your bookkeeping, it's very easy to see something from your favourite craft shop and not remember whether or not that was a business or a personal purchase. I also see it as we get closer to Christmas. Again, you've got beautiful product-based businesses, and it's really easy as we get closer to Christmas or people's birthdays to just say, just give you this beautiful piece of jewellery that I made. Now, we need to make sure that we are reflecting the necessary adjustments for that in our records. And again, this will vary geographically. So have a look at how you reflect personal stock that you've taken out of the business for personal use and make those adjustments in your accounts. I understand, like the bookkeeping process itself, paperwork is not fun for a lot of people. It's incredibly boring. And sometimes we don't keep on top of the paperwork. So we need to make sure that we have all of the supporting documentation for every transaction in our business. A lot of times this may just be the bank statement, but if you've got receipts or invoices, we need to be able to refer back to those. It's part of our obligations as a business owner to keep those records. Luckily, we don't have to keep them in paper format. In fact, I recommend you don't keep them in paper formats. I personally scan anything that's in paper format and I upload it to a cloud, or I will save any attachments from emails into cloud storage. There are a couple of reasons for this. It's really easy to lose receipts. If you just shove them in a drawer and forget about them and come back to them many, many months later, if you can find them at all, you're not going to be able to read some of them. Some will degrade invoice receipts really quickly. So it may be that you can't even read the receipts, or you can't find them, or you forget about them. Put them in an envelope and you scroll postage across the front because you paid for it in cash, and then you put that in your desk, and by the time you finally get around to doing your bookkeeping, pulling your accounts together, you've forgotten all of those times that you went to the post office to send something and just paid for it in cash and got the receipt and shoved it in that envelope. Can't remember where you've put it, you don't know where it is, it doesn't make it into your accounts. Luckily, if you are utilising professional software, a lot of them will have the facility for you to just take a picture and upload it and attach it directly to the transaction, so the payment out of your bank that it relates to. That will make things a lot easier for you. But even if you're not, a lot of the cloud storage, things like Google Drive or OneDrive, have apps that will go on your phone, so you can take a picture and save it directly into that cloud storage. I say cloud storage over regular storage because I have seen one too many times somebody's computer just die in front of them and they go, it was all saved on my desktop. Make sure that anywhere you're putting things is backed up so you can access it anywhere, which makes it easier. And in the event of catastrophic hardware failure, it's not lost forever. So let's talk about expenses in general. Expenses will feel like a really tricky area to get your head around. Knowing what to claim and, more importantly, what not to claim as an expense in your business is really important. We don't want to be either over or under declaring our profit figures when we're filing anything for the UK with HMRC. For the majority of expenses, we look to what is called the wholly and necessary test. So if an item is wholly and necessary for the business, it will be an allowable expense. There will be some additional expenses where you can only claim a percentage. If you have a piece of software that you use for both business and personal use, you can claim the business percentage of that particular piece of software. Making sure that you are also making a claim for things that you pay for personally is really important. I refer a lot to work from home expenses. So as somebody who works from home, I claim a percentage of my home utilities for business use because I am using them to power my business. If you're not putting those through your business isn't really supporting itself, and you're not getting an accurate picture of whether or not your business is covering all of the expenses that you need it to be covering. Cost of powering our business is a cost of the business. And then you look at the things that we can't claim as an expense. So I specialise in dealing with UK sole traders. And as a sole trader, the money that we take out of our business has to be categorised very carefully. We have to make sure that if we are pulling money out of our business for our own personal use, that we mark it as drawings and not as something like a salary expense, which would be a cost of the business. So making sure that we understand the money that we're taking out and how that relates to the business is really important. Now, this might not be applicable if you're not from the UK, but we pay income tax as a sole trader on the profits of our business. So we own the entirety of the profits of our business as a sole trader. That money that we pull out is just part of those profits, so we have to make sure we're not calculating it in the expenses when we're putting together our figures for HMRC. There are also certain expenses that are disallowed for tax purposes. So things like charitable donations. So as an organisation that likes to give back, and for me as a person who likes to give back, I'm likely to make charitable donations in the name of my business. However, If this is to a large charity, and I'm just doing it out of the goodness of my heart, and I'm not getting anything in return, which is how a lot of donations should work, that's not actually a business expense, regardless of the fact that my business paid it. It's not a business expense. It's not wholly for the business. It's not necessary for the business. And we need to make sure that we're making those adjustments so that any donations that we made are classified as money that I personally have given and not money that my business has given for tax purposes. Not having a system in place is a fundamental thing that people will miss. And a lot of this is because they're unfamiliar. They don't want to have to deal with it. They don't want to have to look at it. Having a system in place will help you keep on top of it and help you build a habit of your bookkeeping within your business. And I know that a lot of people will be unsure of how to create that system. So I'm going to tell you the system that I use. And it's a really simple system. It's based on actions that we take every day, actions that we take every week, actions that we take every month, and actions that we take every year. So all you will need to do is adapt this to fit around the legislation of the particular country that you're operating in, but your core kind of tasks that we do will be the same. Every day, check your transactions. Every day we're going to look and see what happened in the past 24 hours. Is all income and expenses recorded? I know what's happened in the past 24 hours. It was only 24 hours. So make sure that everything that has happened is reflected within your accounts. And doing it every day, it's a 5-minute job. Double check everything. Is everything right? Is anything missing? Do I need to make a note of things that are missing to see if they appear tomorrow? Has everything that I expect to have gone out? If it hasn't gone out, it'll probably go out tomorrow. So I'll just make a note of it and I'll check on it tomorrow. Have I taken anything for personal use, whether it be stock, whether it be cash or business? And every day I run through those 3 things. I go, let me check it. Everything's definitely there. Have I taken anything out for personal use? If I have, is it recorded? And then once a week, we just take a little step back and we look at the picture of our business. Is anything overdue? So for people that operate on you invoice clients, it could take them a week to pay you, maybe on 30-day payment terms. Have you been paid for everything that you expect to be paid for? And if you haven't, chase it. Is it a case that it needs to be chased, or do you need to escalate this chase further? Is there any escalation process that you can put in place to make sure that those outstanding invoices do get paid? And I plan for the week ahead. So I do plan a cash flow forecast, so I know what date most expenses come out for my business. So I know for the week ahead what I'm due to pay, and I make sure that I've got the money in the right accounts to be able to pay those. So just have a sit down, have a little plan. Again, this will only take, depending on if you've got to chase a lot of invoices or if you've got one-click invoice chasing, it could only take 10-15 minutes. Just have a think and go, what's due to go out? Is there anything that's going to surprise me? And if not, you just move on. And again, we've done the daily reconciliation, we've done those daily transaction checks, so we're in a really good mindset of knowing where we are with our business. Every month, reconcile the bank. Now, bank reconciliations can sound really scary. All it is, it's the process of making sure that everything that appears on your bank statement is in your accounts. And if it isn't, it should be, depending on what it is. So I will, in most cases, I operate with 2 screens, but you can print out your bank statement and you can have your accounts and tick off every time you find them that match. And then when you find things that don't match, if you've got something that's in your accounts that isn't on the bank statement, you can then investigate why that's happened. This is where we pick up things like those inputting errors, where we accidentally transpose a couple of numbers, or duplicated transactions because all of a sudden there's 2 there, there's only 1 here. So the bank reconciliation process will identify a lot of the errors as you go along, which will make things a lot easier for you when it comes to the end of the year. Then at the end of the year, we look again at everything. Just a lot of checking and rechecking. So we check our profit and loss accounts. We look at every category and we go, have I missed any duplications because I'm sending it out of PayPal and sending it out of my bank account? Your year-end check, when you look category by category, will identify that for you. Is there any missing income? Do I know that it seems low? And it definitely should have had something on the month of March that isn't reflected. Make sure that you follow up on that. It could just be that you've put it in the wrong account and it's not showing where it should be, or you've accidentally allocated it somewhere where it doesn't matter. And then check for those disallowed expenses again. So have a look at your categories, make sure that anything that, if you're a sole trader, you've got staffing costs, you know that you're going to need to look at those in a little bit more detail. And then, once you've done all those checks, as long as you've got all the details of all your other income for your tax return, if you're in the UK, just file it. File early. You can file from April. So you don't have to pay any tax that you owe until the payment deadline. But if you file early, at least you know how much you're going to have to pay if you're going to have to pay anything. It can, if you're not sure about how tax and things is calculated, which a lot of people aren't, and that's understandable, until you've got that figure in your head that you know how much you're going to pay, you don't want to be worrying about it until you know whether or not it's actually going to be a problem. In a lot of cases, it's never as bad as we think it's going to be. And then the final thing I'm going to say, this is the biggest mistake that I see people make. It's not reaching out for help and support. There are lots of free groups on all of the platforms where qualified people, or you have memberships like mine, will hold your hands through it. You don't need to be taking it on all by yourself. You don't need to be tackling it and spending hours wading through 12 different opinions on Google. The important thing to make sure is that the people that you're taking advice from are suitably qualified to give it, that you like them, and that's more important than you think it's going to be. That you feel safe to ask the questions that you need to ask. So you don't want to be taking advice from somebody that's making you feel like you're being judged for not being at the same stage as them, because you're seeking the advice because you're not. You need to feel safe to ask what you think is a silly question, which I know is a perfectly normal question to be asking at a really fundamental level. Take your time to seek out those people. Take the time to seek out the people that will help guide you at the stage of the journey that you are at. And that actually covers the majority of things that I see when people do it themselves. You have a lot of differing opinions, and people may want to try and do it themselves, but I do think like not asking for help is absolutely the most fundamental thing that people can go wrong with. So I will, if there is any questions that have come in that I don't think there are, I'm happy to answer anything, and I will just pop up. This is where you can find me if you want to hunt me out. I do have a free Facebook group, and the two kind of main focuses that I think people need to be looking at, especially at this time of year: guided support in a membership, and we do tax return sessions for UK sole traders that are panicking because it's only September, but it's inching ever closer all of the time. So that is everything from me. Thank you.
Thank you, Julie. Thank you a lot. It's amazing because you make it so simple, to be honest. Like I love how you've thought this through and gone through with it. A couple of questions. So I think I'm one of those guilty people who I mix up my expenses. So I use my personal credit card to buy some things for my business. Is this an issue? Like, is it a problem or?
So obviously, a lot of the time, it's better to come from a business bank account because it's easier. But there is nothing to stop people utilising personal banking to make business expenses. It's just messier. And the risk that you have is if you don't keep on top of your accounts, you're going to forget about it.
Yes.
And then you're in a position where you are personally financing your business. Your business isn't financing itself.
Yeah. That's probably already the case. The other question that I have is around, so one of the barriers I think people have with all of this is that they think that it's prohibitively costly to outsource their bookkeeping. But I've actually found it's such a saving when you really think about it, because you're not spending the time, especially if the person you outsource to has an automation process, has something that basically can, pull the data from your PDFs, etc. It makes everything easy for everyone, and it keeps you up to date. You can have management accounts. If you're using a system, you could have management accounts from the system. So it's kind of a no-brainer to me, and I don't know what your thoughts are about that.
It's something that you really dislike doing. It is worth taking the time to get some quotes from people and see. You will find some really cost-effective services out there that will provide things like monthly management accounts, that will file your tax return, that will pull things together for you. There are some, obviously the bigger organisations can do it a lot cheaper than your individuals. You'll find a lot of individuals that aren't particularly prohibitive on cost. So it's worth the time to reach out to people and ask what the cost of one-to-one kind of services would be, the done for you services. If you hate doing it, just pay someone else to do it. And I took that kind of line quite early within my business journey, is if there's things that I particularly dislike doing, I'd rather pay somebody to do it themselves, because that is worth more than my time.
Yeah.
I pay somebody to clean my house because I hate it. I hate it so much. It's worth every penny because it makes me sad. And if doing your bookkeeping makes you sad, just pay someone else to do it.
Yeah.
It will probably be cheaper than you think it's going to be. But you find, especially when people are starting out, and I see this more with people that run it, funnily enough, alongside people with side hustles that run alongside their full-time jobs, who you would think would actually be in a position to outsource quicker, want to learn to do it themselves. They want to have that control. They want to be able to see things. And it's the misunderstanding that if you hand it off to somebody, you're not going to be able to have that lifetime update that you would yourself. But then they don't do it themselves either.
Yeah. No, it's definitely, to me, that's the best decision I've ever made since I started in my business 4 years ago. Outsourcing this stuff is just brilliant. All right, so thank you so very much. I think, do you want to put up your slide one more time so that people know where to find you, just in case? And I guess, did you put the link to your group there, or? Not sure if you did.
Will. So you just search for Handmade accounts on Facebook, and you should be able to find it. The free group should pop up quite quickly.
Okay, and if they go to your website, they'll find out about it as well. Okay, super. Perfect. All right, so thank you so very much for spending the time with us today. I will be sure to get this on YouTube tonight, hopefully. And for any of you who joined us and did not find us online at 6 o'clock, I'm very, very sorry. Thank you very much, and see you soon.
Thank you.
Cheers, bye.